The news day continues here on One News Now. I'm Danny Laurel. So first of all, a happy new year to all of our viewers here on One News Markets. This is the first trading day, at least in the Philippines, for 2023. Now, before I check in on our local bourse, just a quick peek on how the global equity space is doing. You can see here quite some reddish tones when we talk about the U.S. stock market, but at the same time, we did see U.S. futures opening in the green. They haven't opened markets in 2023 thus far. That's going to be happening later on. They're still on holiday here. Just to remind everyone that the S&P 500 was down by around 20% in 2022. So just seeing how that's going to be faring on the first trading day. All eyes are on the U.S. this afternoon. But take a look at Europe. That rallied on Monday. So that market was open at least on the second day of January. The Euro stocks was up by 1.7%. That's a good gauge of the blue chip sentiment over in Europe. And let's take a quick peek at how Asia is opening this morning. We did see Australian shares steady, but we do see quite some reddish bias here. You can see the Hang Seng down. That's over in Hong Kong as of 9:31, down by 1.5%. The markets all over in China as well in the red. You can see the FTSE Straits Times in Singapore down by 1.1% this morning. The Nikkei 225 still flattish today. Over in Brazil as well as South Korea, that was down. So a bit of uncertainty here on what will be going on around the world. And where are we at here when we take a look at our own local bars on the first trading day of 2023? Take a look at that. A bit on the upside here. We're at 65.68.10. We are about 30 minutes or less than maybe 20 minutes into trade. We can say that's a bit flattish. If you take a look at the one-year chart, our analysts had been mentioning that 2022 was the year of sideways trading. Will we be seeing a bit of optimism here? There are a lot of issues going on when we talk about how the global story will be affecting our local bourse. One main issue of concern is, of course, China and what's going on with the COVID issue over there. We did, of course, report earlier on the Transport Department discussing whether or not there will be some restrictions or testing that needs to happen for Chinese tourists to come in. Just a quick note on that, half of the passengers on some Chinese airlines entering Italy, particularly Milan, had tested positive for COVID virus just in the past couple of days. So Italy and the US have already imposed some restrictions, and let's see whether we will be following suit here in the Philippines. Now, just a quick peek into the first trading day of 2023 and which ones are our best performers. You can see Mega World leading the charge up by a hefty 5.5%. You've got Mondanisan and Aboitiz Power following suit. So a mixed bag here in terms of sectors. You've got property, you've got consumer, you've got energy, and you've got telcos, which is still, of course, the story of 2022, at least the latter end. Globe Telecom is up by 1.4%. On the downside, you can actually see the four worst performers happen to be linked to Ayala Group. You've got BPI dragging down the index, and that's down by 3%, followed by Ayala Land, AC Energy, and the parent company Ayala Corporation. I did want to take a peek at some sectors here that we are watching very closely. One, of course, is the airline story with that entire NAIA saga or Kaap saga. And you do have questions here on, will that be affecting how tourists will be entering the Philippines? Whether that will be spilling over into the bookings of the flights as we proceed, apart from the China COVID story, which is also impacting of whether, Chinese tourists will be impacting other bookings into airlines. You can see Cebu Pacific, which of course suffered massive flight delays yesterday, down by 0.4% this morning. PAL remains unchanged at 5 pesos and 90 centavos. and Macro Asia, which of course is service-oriented, is unchanged as well at 4 pesos and 90 centavos. Another one that I wanted to check in on is the telco story. If PLDT is opening the year in the green, it does seem to be the case after having felt the biggest sell-off in its history, and having announced, of course, that it will be canceling projects on that 48 billion peso overspend, or what they said, a budget overspend on their capex. Some bright spots here for PLDT. You can see that up by 13 pesos to 13.30, and in the past 3 days, at least since the last close on December 29 here, you could see PLDT gaining a hefty 5 4/10%. And finally, just a quick peek on the peso. How are we doing in terms of opening the year? Stronger note. I mean, 2022 saw us swinging from 51, 53, all the way to 59. We were very worried it will be remaining above or breaking above the 60 to the greenback, and it does seem to be the case that it's strengthening from day to day, trading right now at 55.713 to the greenback. How do we compare, at least for the one-day basket, when we compare us to the rest of the ASEAN or Asian basket? Well, we are right at the third spot here, actually, up by 0.07% compared to the rest of the currencies. But of course, you've got the Hong Kong dollar and the Chinese renminbi or yuan here suffering quite some weakness here. Thai baht and Japanese yen still leading the charge with the one-day spot returns. Now, we'll be back with more stories after the break. Keep it here on One News. And you're still watching One News Markets. I'm Dani Laurel, and here are the stories on the corporate front. JLL Philippines is seeing headwinds for the property sector this year. The real estate firm said these challenges are primarily due to structural changes and macroeconomic challenges. Now, in the last quarter of 2022, JLL saw a slowdown in leasing and sale activities, while rents and prices declined. JLL noted, though, that fundamental market drivers like the growing BPO industry will serve as, quote, floaters through 2023. And more mobile users have registered their SIM cards. And based on the latest data from the National Telecommunications Commission, over 11 million SIM cards have now been registered. Mobile users have until April 26th of 2023 to register their SIM cards, which could still be extended for 60 more days. The complex and high-stakes $550 billion business of making semiconductors has always been a battle of corporate giants. Now, the chip war has also put nations in a technology arms race. More of that in this report by Bloomberg.
These critical bits of technology may be the tiniest yet most exacting products ever manufactured. And because they're so difficult and costly to produce, there's a worldwide reliance on just a handful of companies. Access to chips has also become a geopolitical weapon, with the US stepping up curbs on exports to China. It also asks tough questions of US allies. South Korea, home to powerhouse chipmaker Samsung, has increasingly found itself caught between its top security ally and biggest trading partner. The country passed its own version of the US CHIPS Act, which was spearheaded by lawmaker Yang Huangjia.
I believe holding technological supremacy is a way that our country can take the lead in any security-related agendas, such as diplomatic and defense issues, without being swayed by other nations. And that's our legacy that we should hand down to the further generations.
In October, the Biden White House imposed tighter export controls on some chips and chip-making equipment. The move is part of a longer-term strategy to prevent China from dominating the industry and developing an advanced military, while securing its tech supply chain by enticing chip makers to set up shop in the US.
We're turning things way around in a very big way.
China has criticized the expanded US restrictions, saying they'll hurt the interests of US companies and harm supply chains. Japan and the Netherlands have agreed in principle to join Washington in tightening export controls to China. In response, China lodged a complaint with the World Trade Organization, accusing the US of protectionism, and courted South Korea, a key US ally. Chip production in South Korea fell in November by the most since the global financial crisis, pointing to a further cooling of overseas demand for tech components.
그래서 가장 두려운 것은
The biggest worry is that companies could eventually move their major bases to America, following CISA's request from the US. Companies make decisions in their own best interest, and they prefer moving to countries where there are big markets and better conditions and benefits. Then many people will follow. And then, how could our country survive? I would say there could be a new technological colonialism.
Yang also says Taiwan plays a crucial role in US-China tech tensions, and if its leading chip maker TSMC suffers from global chain disruptions, Samsung may be well placed to fill the gap. Adrian Wong, Bloomberg.
For more updates, visit News 5, the Philippine Star, and Business World Online, or visit our website, onenews.ph, for more in-depth analysis. You can also catch One News on the Signal Play app. Register for a free account now. That's at www.signalplay.com, and stream One News Live anytime, anywhere. Join us again at 11:15 a.m. I'm Dani Laurel. We are One News, all sides, all the time.